Last night, the market went into a correction again. If you look only at the chart, the conclusion seems obvious. The growth is ending. It's time to take profits or maybe even open short positions. But this is exactly the point where I usually stop looking at the price because the price only shows the consequences. I'm interested in an entirely different and specific question. Has anything at all appeared today that would really make me abandon my scenario? Yeah. In other words, the long position I opened back on July 8th. These are not assumptions, not any emotional issues, not just another series of red candles that might put psychological pressure on many market participants, but real changes in the behavior of major players. If I find even a single strong argument, I will change my decision. If not, I will leave the position unchanged. So let's begin the review. And the very first indicator that should make me liquidate my long position is the exit of a major buyer. If they really have started to exit, then the rest of the analysis will not make any difference at all. I opened the system and actually, that is not quite right. No. Despite the correction, the buyer zone has once again moved higher than the previous one. I'll mark this on the chart now so it's clearly visible and we can see that the new buyer's zone has formed at higher prices. And this tells us that the limit buyer is still present and is fully controlling the situation. Moreover, they're starting to show themselves at higher prices. And this means that big capital algorithms and market makers are not changing their behavior. Alright, but that's still not a reason to relax for those holding a long position with me, because there's a second scenario in which my strategy also stops working. And even if the buyer remains, the market can still reverse. This would happen if the new buyer's zone forms lower than the previous one, but right now it's higher than the previous one. But still, let's examine a variety of other key performance metrics that show us whether the sellers are starting to act in a significantly different way or if they're simply behaving in the same way they always have before. What does this mean? I've opened the metrics again that show us the short presets, and here's clearly what I see. From the perspective of the limit sellers, there was no activity whatsoever. This means that the market entered the seller's zone on July 4th. Yes, this was visible on many altcoins. At that moment, Bitcoin was flat, but if we open up some altcoin, for example, the same Nia coin, we'll see that yes, there really was a correction of about 10%. So altcoins underwent a significant correction, and after that, we began to see prices trending steadily higher. Musa. As we saw, stronger buyer support zones were forming at higher prices, but at the same time, the market did not return to the places where the actual limit seller is sitting. It didn't return. It didn't return here, nor did it return here. And now the metrics have heated up again to the same levels from which rebounds occurred previously. That is, just like it happened here as well, and like it is happening now. And this tells me directly that since this is happening at higher prices and we have rising highs, what should we expect next? Well, of course, a move even higher. There is no pressure from sellers. And should we interpret these as corrections? Either as a shakeout of proper longs so that long traders don't make money, or maybe my system is malfunctioning. However, we will continue to analyze the market conditions and carefully search for additional supporting arguments. And by the end of this video, I think it will become clear what specific conclusion we can draw from this entire review. That's why I don't quite understand which metric to trust at the moment. It could be that we keep coming into the buyer's zone and that's a very favorable spot to go long, because each new low is higher than the one that came before it. Or perhaps the system has failed and corrections are starting even from levels where the market doesn't enter the seller's zone, which is extremely illogical. But now we'll look into it further, and we need to consider that if the buyer remains, if the seller isn't getting stronger and isn't acting as actively as they usually do in the seller's zones, when we see the consequences of a serious correction, then the reason might be something else entirely. Maybe it's not in the spot pairs. Maybe it's actually hidden specifically within the margin loans. There's a hunt going on for margin traders. By the way, it's important not to confuse them with futures traders. Let's move on to the MLSP metric, which shows us the ratio of long to short accounts in margin trading. And here, of course, there's a clear negative trend. We see that margin traders are shorting mostly across all margin pairs. Unfortunately, that's the case right now. But last time, this metric appeared right before the dump in June. Now, it's been at the same levels for quite a while, but prices are lower. What does this tell us? It tells us that margin traders are actively shorting. Of course, on one hand, this is both positive and negative. What's the negative side? The negative is that if these are some insiders who are shorting the entire market in sync, then prices could really drop, because if they know something, they'll push prices wherever they want. On the other hand, the market could move against them and wipe out all the margin short sellers. So it's a double-edged situation. Let's figure it out now. In other words, our data is contradicting each other. According to the limit metrics, we have an excellent entry point for a long position. Yesterday we did some research and found that for the long term it's the perfect place to buy, but in terms of margin loans, the short-term picture isn't great. Consequently, the incoming data appears to be contradicting itself. And margin traders, let's say, are actively betting on a sustained and continued decline in prices. If the next set of data confirms this growing concern that the market might actually follow the margin traders, meaning move in their specific direction, then the decision made today will really have to be reevaluated and changed. And now let us open up a specific metric that will show us clearly whether margin traders are stopping their capitulation. So let's examine more closely whether open margin short positions, which we just looked at right, in large proportions, in large numbers, we understand that there are currently a significantly higher number of margin accounts actively working short positions on the market. Does this turn into some kind of fear for those who are still going long on margin? In other words, just looking at the shorts is not enough for us to understand this. If participants really start to fear a further decline, they should reduce the risk of their longs, right? The trades in which they are taking long positions, that's why we open the metric that shows us USDT borrowings. And USDT is borrowed in order to make purchases with margin loans. And we see the following situation. Over the past 24 hours, more than $100 million in borrowed funds have indeed been returned. And this, of course, was done at a loss. So, first they borrowed a large amount, 174 million, to buy coins here, and now they've already returned them at a loss, amounting to 100 million. In other words, margin traders who are going long are afraid of any corrections. At first glance, this is a positive sign. The positive aspect is that we see any correction shakes out the longs, and long traders themselves are afraid. This is especially noticeable with margin trading. Any correction immediately forces margin traders to return their coins, and as soon as they return the coins in the volume that they have just returned right now, we immediately see another wave of growth. Furthermore, this wave of growth is accompanied by new highs being set, just like what happened here, after which the high was updated at this point. And the LOI is also rising as well. And once again, we have reached the point from which the previous two growth waves started. So the situation here is as follows. Considering that there are more margin accounts on the market than longs, and at the same time, the long traders who are present in the market return their coins at the very first correction, we end up with an interesting situation. There is fear among margin traders who are working from the long side, which means that the main argument against my scenario becomes weaker. And there remains the final check. There is one last chance to prove that I am wrong. If a reversal is really starting, then the futures market should show it as well, right? So now we open the funding data and see that the negative group has now climbed to 17%. Well now, is that considered a lot or just a relatively small amount? But just so you understand, 15% of all Binance futures pairs are being shorted with such large amounts of money that the spot price becomes lower. In other words, the futures price drops below the spot price. And there are specific key price levels in the current market phase we're in from which the actual growth phase begins. That is, when they start targeting futures traders who are shorting and begin to liquidate them. For now, we are steadily moving toward these values, but we have not quite reached those points just yet. But the most important fact is that, on the contrary, this metric is heating up. In other words, short sellers are piling up, and whenever that happens, the market always eventually moves against them. And this present situation does not provide me with any valid reason to change my decision or my overall perspective. At the beginning of the video, I said I was ready to change my opinion, but only if I found sufficient grounds for it. That's exactly what I was trying to do just now, and I didn't find any. I was looking for signs of a major buyer exiting. I don't see it because major buyers are only showing up at increasingly higher prices. Even in real time, you can already see a certain rebound happening right now. And all of this has been happening at higher prices than in the previous buyer's zone. I was also looking for sellers' efforts but didn't see any because here the limit seller wasn't active in this area. Here the limit seller wasn't active, and the last time a limit seller was active was only here. And as we saw in the example of the altcoin NIA, we witnessed a significant correction in altcoins. Well, for example, Bitcoin corrected by only 2%, but Bitcoin is in a kind of sideways movement, whereas altcoins, yes, they are correcting. Actually, I can only interpret these corrections as shaking out the proper longs. That is, people who are entering long positions at the right spot, or at least not at the right spot, maybe at local highs, but their priority is still to go long. Naturally, as we can see, the market is aiming to grow, judging by the limit metrics and global metrics we looked at yesterday, but of course, it wants to do so without any unnecessary passengers. And there is a clear trend indicating that soon we will break out and update the previous high of 65,000. Yes, the fact that the market has corrected is, of course, unpleasant, and yes, it means having to stay in a position for a long time, but nevertheless, this does not mean that you need to change your scenario. It's just a matter of time. Yes, there are situations that now require close attention, namely the ratio of long to short accounts. Nevertheless, after all the checks, I did not see any changes that would usually make me abandon my main scenario. Let me remind you, this is the long position from July 8th, which we opened together with you. I continue to hold it, and am even considering increasing my position, maybe even from the current levels. But this decision is not final. If the behavior of major players changes, my conclusion will change along with it. This is something you need to clearly understand. That is exactly why every day I start my analysis, not with the chart, but with the data that shows the actions of the participants who move the market. If you want to see these changes as soon as they appear, join my Telegram channel. There, I publish my observations before the daily review comes out, and subscribe to my YouTube channel. Here you can make money. That's all from me. Share your thoughts in the comments. Thank you all. Goodbye.